Welcome to Citi Market Watch, where we concisely unpack all you need to know on important topics. Joining me, Audrey Cheong, Citigold Private Client Portfolio Counsellor.
Time for national service.
That's right, Audrey. But in this case, Citi National Service. Our 2023 mid-year outlook is out, and as with all investments, understanding CIO views and asset allocation strategies is pivotal.
Yes, son, pivotal because we are pivoting to growth. After almost 2 years of bonds are back and being quite defensive, we see opportunities on the horizon. With US inflation easing, the Fed on pause, and the bar rising to justify further rate hikes, we expect a Fed pivot later in 2023. This should or will change the paradigm, unleashing opportunities galore.
Before we get too excited, the reality is yields remain high, partly because investor sentiment remains poor. Bearishness remains prevalent with very high short-term equity interest and money sitting in money market funds, and T-bills are at multi-decade highs. Short-term rates are at their highest levels since 2007.
As we said earlier in the year, this remains and is the most anticipated bear market ever. And that alone is an important argument why market timing will not work. If everyone is waiting, then any decline will be brief and hence untradeable. It is likely one reason why, despite the calls for recession, despite the cataclysmic fear of a US debt crisis, despite US-China tensions, and despite the war in Ukraine, equity markets and yields are up.
It is incredible, but given longer-term growth rates and inflation are already trending lower, the inevitability of lower interest rates is high, and hence, without over-finessing Fed machinations, there remains an absolute simplicity for investors to simply own and retain higher yields and profit from it by owning longer-dated maturities or adding duration. So, Audrey, as inflation subsides, the Fed pivots, and we envisage a potential recovery or improving outlook into 2024, what are the other potential opportunities for investors?
The key thing to note is the peaking of the US dollar. Now at its highest in 50 years, we see a gradual and uneven decline. This is driven by growth and interest rate differentials and a current outsized gain in US equities, which now reflects a record of 62% of the world's equity market capitalization. In addition, the US dollar represents nearly 60% of foreign reserves and 88% of the invoiced world trades.
Alternatively, consider that the rest of the world, the non-US world, on an EPS or earnings per share basis, the non-US world now trades a historic 40% discount to the US, or 30% below its own 10-year average. From Europe to Asia to LATAM, there are global peers presenting unrivaled value and opportunity.
And son, the gains we have seen in US equities has been extremely narrow. Since the beginning of 2023, more than 90% of the US stock market appreciation can be attributed to just 5 stocks, which means that even within the US, there's significant relative value presenting itself.
I think for some investors, this may be deja vu, Audrey, but absolutely, there are significant, if not almost historic opportunities to be found in what is a dislocated small and mid-cap space. What's that dislocation? We are seeing small and mid-cap stocks trade at a 30% valuation discount to US large caps.
And remember, as much as the Fed's historically aggressive rate hikes in the last year and a half have crushed markets, delivering historic double-digit declines in both stocks and bonds through 2022, or the worst combined returns for a 60-40 portfolio since 1931, the expected end of or reversal of this, that is, rate cuts, has now supported, if not fueled, markets.
Audrey, to be fair, generative AI has been a standout catalyst.
Without a doubt. Now, the strong balance sheets and growth prospects of large cap technology was always a draw card, but as we covered in previous episodes, Artificial intelligence, generative AI, or ChatGPT has reset and turbocharged technology like the birth of the internet or the launch of the smartphone. Large cap tech is up 37% year to date, and we see further reasons to add exposure to generative AI.
Wow, or super wow, Audrey. This is an exciting mid-year outlook, a pivot to growth that interestingly feels like a smorgasbord of opportunities. So join us for our mid-year outlook podcast as we explore and dive deeper into this smorgasbord, debate the options, and consider too the windows of how these different strategies will likely unfold. Thank you, and please speak to your Citigold or Citigold private client relationship manager about further opportunities.